Can you time the real estate market? Our next guest is here with some advice. Please welcome our San Diego real estate expert, Voltaire Lepe.
There he is, Mr. Lepe. What's going on, my man?
Not much.
Good to see you. Today we're going to talk about how to time the real estate market. Now, a lot of people, I'm just going to warn you, have said, don't try to time the real estate market.
Right.
They've said that. They've come on the show and said, don't try to time the real estate market. It's too difficult.
Right.
Today you're going to have a solution for us. We'll talk about where the market's at.
We're going to talk about that.
But you think that you can teach people how to actually time the market?
Well, I think I have some really good advice to give to people about doing that, because that's all I hear all the time from different buyers and different sellers. And it's natural. You know, people want a crystal ball. You know, they want to know what's going to happen in the future. They want to make as much money as possible or pay as little as possible. So hopefully we could, talk about that today. And I have a couple of case studies that I'm going to share. Yeah.
All right.
Okay.
I like it. Well, let's start with kind of where we are right now here at the end of 2016 and where you think we're headed for 2017.
Yeah. So right now, 2016, the fourth quarter, it's kind of like a lot of holiday seasons where things are a little bit slower. There's still a lot of sellers out there selling. People that are selling right now, they're selling because they have a need. They need to sell. They're not just out there testing the market, in November and December.
Right.
So it's a good opportunity for buyers to go out there and buy a property. Interest rates, they're low, historically low. If you look at the last 46 years, we're in the 70s, 1970s, they averaged 8%, and then in the 80s, 12%, and then back to 8% in the 90s, and then the 2006%. Right now, we're hovering right at 4%. Even though they jumped up a couple of weeks ago after the elections, they jumped up half a point. But it's still a really good time to get a mortgage. And with the activity out there, if you're a seller, you put your house on the market, most likely you'll have a couple of offers. You'll have a multiple offer situation. So it's still a seller's market. It's not a buyer's market yet. It won't be until we have a lot more inventory. So right now, as far as there's three things to think about when it comes to real estate market. So one is interest rates, right? So the rates are good. The second one is inventory. And the inventory, we're still negative inventory. I think last time I checked, we're negative 10,500 residential units in San Diego.
Wow.
Yeah, so we need to build more. I think actually we might have talked about that
Probably
6 months ago with multifamily guest that came on.
Yeah.
Yeah, do you remember that?
Yeah, absolutely.
So we're negative 10,000 residential units. So, once the builders start to build and then we have, more inventory, then usually what happens is we have a surplus of inventory. And then at that point, that's when it becomes the buyer's market.
I'm worried that that'll never happen because I think the builders right now, or at least what I'm seeing, is they're building rentals.
Right.
And not homes that are for sale. So when we talk about inventory, we're talking about homes that are for sale,
right,
that someone might be able to buy. And we do have a housing crisis. In other words, we don't have enough units for the number of people that are coming here.
Correct.
But I think those units are being filled in. The builders are going, wait a minute, why should we take any risk for a market crash or anything like that? Let's just build these units in high rises and rent them out. Let the 10-year period of litigation pass, and then we can sell them if we want to, or we can just sell it to a REIT or whatever.
Right.
So I'm worried that we'll never see a buyer's market in San Diego again, Voltaire.
Yeah, I mean, that is a possibility. And the reason why is because the weather, man. I mean, really, man. I mean, I've traveled a lot all around the world, really nice places. And every place that I've ever been to, I could never really say to myself, oh, this is better than San Diego. It's always like, oh, well, San Diego is, 70 something and, it's a lot better. So with the weather attracting a lot of people, being on the West Coast, Navy Town and all that, I mean, a lot of people want to move here. So that's one reason why, there isn't much inventory. A lot of people want to buy here and they're buying. So prices, interest rates, inventory, and then that affects the prices. So there's a lot of people that feel that prices may go down. And you hear this a lot, whether it's because even before the elections, people are just saying, oh, it's that bubble, the real estate bubble. That's what a lot of people always talk about. And, it sells newspapers and it's good for headlines. But the reality of it is, I don't think we're in a real estate bubble, you know. And you know, I read articles every month, and they interview like the top 100 economists in the country, top real estate people all around the country, and most people have a good outlook for 2017. You know?
Do you?
Yeah, I do.
Okay.
Yeah, I think that it's going to be. I think it's going to be good. I think prices are still going to rise. That's a lot of people are projecting 7 to 10%. Prices are going to change from 2016 to 2017. I'm not sure if it's going to be that high, but I think that prices are still going to continue to go up. And I think there's going to be plenty of buyers for all the homes that people are selling. I mean, rates, again, historically, they're super low.
Yeah.
Yeah.
I still think there's opportunities for buyers too in areas like where your office is, for example.
Yeah.
Down in the Golden Hill, Barrio Logan area. I think there's a lot of opportunity there. You're already seeing tons of gentrification and cool new stuff. It's becoming like a hip spot. It reminds me of what North Park looked like when I first moved here.
Yeah. I mean, there's a lot
It really does.
Yeah, there's a lot of artists down there that are moving down there, a lot of millennials, you know, hipsters, yuppies. I mean, there's a lot of, yeah, and you know, really those are the people that go in there, they push their rents up because now maybe they're not in a position to buy, but they're paying from what used to be a $1,500 a month rent to all of a sudden they're paying $1,800, $2,000. So rents for sure drive value.
Yeah.
So all the rents are going up. I don't see that stopping anytime soon. Again, we're negative 10,000 units in San Diego. So with rents going up, that's going to, when people go to sell their apartment buildings or people go to sell their investment properties and they have tenants in there paying a certain amount of rent, that dictates the value of that building. Yeah, directly.
Well, based on all that,
Yeah.
how do we use this information to time the market?
All right, good. So when I meet buyers, okay, they go, well, I kind of want to wait. I think the market's going to go down, right? I still know some buyers that have been waiting since 2011, 2012. They would have bought back then. They would have basically doubled their equity in the home. So, you know, homes back then that they were passing up on that were 300, 400,000 now, you know, they're worth 400, 500, 600,000. So one of the biggest mistakes I feel people do is they try to time it. Just like you referenced before, it's impossible to time it, right? So if you're buying, you should be buying for the reason that you need a place to live in, right? You need a place, if you're renting, you're basically throwing your money away. Unless you have a strategic plan that you're saving up money and your rent's super low. So as far as buyers are concerned, if you need a place to buy, or let's say there's a lot of people that I meet that have $50,000, $100,000, $200,000 in their bank account. They're earning basically zero interest, right? A few bucks a year in interest on that money. So instead of having it in the bank account, hey, real estate is expensive. It's San Diego, and a lot of people complain about that. Real estate's so expensive, right? They should just get that money, $100,000, put it on in the property as a down payment. Now all of a sudden they're making, you know, $500 a month in cash flow. That's $6,000 a year. Okay, so I think people just have to come to a realization that we do live in San Diego. Prices are expensive, and they shouldn't try to time the market. If it's a smart move, it's a smart move, right?
So make a better business decision.
Better business decisions. Now,
if it's buying a small condo, cash, and renting that out, or buying an investment property, or buying a home,
right,
that will cost you less than rent and give you some tax write-offs. There's ways that what I'm hearing from you is don't worry about timing the market as when's the best time to buy or the best time to sell. Worry about making a decision that's a good decision for you at that time. Exactly.
So I think that's the most important part. And a big factor in that is affordability. If you could afford your payment, if you're still able to go out to movies and enjoy nights out to dinner with your family and things like that, hey, it's probably a good deal, because eventually 30 years from now, you're going to look back in hindsight, you're going to say, wow, that was a good deal. And I thought I was buying at the peak.
Right. Everyone always thinks they're buying at the peak.
Everyone always
thinks
that.
In the 70s, they thought they were buying at the peak.
Exactly.
In the early 90s, they thought they were buying at the peak here in San Diego.
Yeah.
That's just not there. We still haven't peaked.
Yeah, and you know what? I have clients that bought in the 70s, and they're telling me, yeah, my payment used to be $30 a month. And I'm like, looking at them like, $30 a month? And they're like, yeah, but it was tough. we had to save. We couldn't go out and overspend and things. And so it's the same thing that's happening now. But 30 years from now, after they pay off their mortgage, with appreciation, but with inflation, really, right? Their property is going to be worth a lot more, and they're going to look back and they're going to go, wow, I own that property free and clear. I might have bought a couple of investment properties along the way. So that's on the buyer side, right? I think it's a good time to buy. I think it's never going to be the perfect time to buy, which a lot of people wait for.
Is there a seller side of this too?
Yes. So on the seller side, there's a lot of sellers that try to time the market. I'll give you two examples, okay? I know some really smart guys. They were partners, right? Combined about 50 to 60 years in the real estate business as partners. They picked up some really nice, valuable pieces of property in downtown San Diego, right when the ballpark started getting built and all that stuff. And the appreciation on those properties just went through the roof. So now we're in 2006, 2007, right? They're trying to time the market. They're saying, okay, we think it's going to continue to go up, right? And they had some really good offers from developers. Long story short, they just waited too long, right? The real estate bubble, it popped, market crashed. Their properties weren't cash flowing the way that they should have been. And next thing you know, they lost the property. And now, 2016, that real estate is more valuable than it was in 2006 when they got their best offer yet. So that's when timing the market goes wrong. Because if really smart guys that accumulated a lot of wealth can't figure it out, it's really tough for the average person to figure it out that doesn't do real estate on a regular basis. And even for people that are experts and are in real estate all the time, a lot of people lost a lot of money in 2007, 2008. So I think we just got to learn from other people's mistakes that are a lot smarter than us and that had a lot more experience. It's just really tough to time the market.
No question. And that is a great way to wrap the Smarter San Diego segment about real estate and timing the market. It's more about time in the market than timing the market. Voltaire, thank you so much for your time today, man. Really appreciate it. Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.